So what are the main differences between a VA mortgage and a conventional mortgage? And why is it important to work with someone who has experience in VA mortgages and intimate experience in being a veteran and having a service-connected disability and all of that? I actually Googled and asked, what are the differences between a VA mortgage and a conventional mortgage? And it's funny because none of the explanation has anything to do with the differences for us as mortgage loan originators, as a mortgage company on the back end. There's huge differences in what someone in the position offering you a VA mortgage needs to know versus the differences that you can find online. It's pretty crazy. So when you look online and you ask for the differences, all it says is, hey, VA is zero down, conventional, you need a down payment, you've got no PMI or MIP with VA, but you do have a funding fee. A little rhyme I learned when I got my mortgage license is FHA has MIP, VA has a funding fee. All these differences, you can find them online, but there's a ton of differences you can't find online. Here's a big one. For all qualified mortgage types, which is conventional, FHA, VA, you use DTI, debt to income ratio. So that's your income versus your debts that show up on credit, what that percentage is. And VA does allow you to go over 50%, but sometimes even that, it doesn't accept it. There's an automated underwriting system and it doesn't accept your loan. Well, we fall back on what's called residual income. You're not going to find this online unless you specifically ask what's the difference. And someone in the mortgage business is just going to say, hey, you don't qualify, your DTI didn't work, I'm sorry, you're not approved at the automated underwriting system that they call DU. DU stands for desktop underwriter, and that's what, when we input everything in there, think of it as an AI. It's been around forever though. It tells us if you're approved or not. And then from there, a human underwriter reviews this. Now that's automated underwriting, there's manual underwriting. So when we look at residual income, we need to look at how much money is left at the end of the month after all your expenses. Not only do I and my company have experience with residual income with VA loans, but we also do it a lot with reverse mortgages. That's a mortgage type that does look at income, even though a lot of people think it doesn't. Whole nother set of videos to explain what that is. But as long as you understand that residual income is what we look at, just like with VA loans. So we have a lot of experience in that. The VA entitlement and how it's calculated, this is very confusing. It's very hard to explain. So I explained it in a very basic way that is not completely accurate, because you can own more than one property with a VA mortgage, but how do you find that out? How do you know? Do you want to work with someone that needs to go and research and figure it out, or someone that knows right off and knows where to go to run those calculations? VA has its own system that you log into to do everything, to order the appraisal. You need to have your own lender number, all these things. I had a colleague in the business that owns his mortgage company like me who sent me a VA loan once because he wasn't set up. He wasn't prepared to handle the VA loan. And he'd have to dig into that system and understand that a system I've been using for so many years, closed hundreds of VA mortgages. There are things that experience teaches you that you're not going to learn winging it. That doing a lot of conventional and FHA loans is not going to help you when it comes to a VA mortgage from the mortgage loan originator standpoint, from the company you're working with. Now, just because you find these large companies that have the name veteran in their company name or one of the branches in their company name doesn't mean that they're good. It just means they do a lot of them. And what I mean by this is they charge you more money. So there's a company out there that has veteran in its name, and they're actually being sued right now because they're not owned by a veteran. They were not founded by veterans. They actually take advantage of veterans. What I mean by that is I often get these clients and I see their numbers and I'm like, whoa, why are they charging you this much? I can't even get that high in rate and points if I try, because we're capped at what we can make when we're a small company. Big companies, they don't have to show you what they make, and they can make way more than 2.75%. When we discount you, we have certain restrictions as well, which helps you. Everything is to the benefit of the veteran. But big lenders, they aren't under the same scrutiny as small companies. So they're able to get away with certain things, like taking advantage of veterans, as I say, not taking care of veterans. I'm a veteran myself, 100% service-connected disability. So I can help you guys understanding a lot more that others can't. I mean, look, there's certain language. We all know all the stupid acronyms the military has. Well, there's certain ones, like if you're active duty, you're not getting a pay stub, right? You're getting an LES. Most people don't know that. Your retirement plan is called a thrift savings plan, a TSP. You might think, oh, that's no big deal. The person I'm working with, they don't need to know that. But it's an example of all the nuance. The more and more they have to learn from you as one of their first VA clients, the less and less they're going to be able to truly strategize and help you understand this mortgage and help you get through it quickly. It's funny because one of the things that I saw when I looked up on Google the difference between a VA mortgage and a conventional mortgage, it said underwriting and speed. Talk about a fallacy. It reads, conventional loans often close faster. Not true. Whereas VA loans can take longer due to stricter guidelines and sometimes slower appraisals. There's no stricter guidelines. On the contrary, there's looser guidelines, less money down, higher debt to income ratio. So there's all these myths that are perpetuated out there. Realtors, a lot of realtors don't understand this. I have realtors call me because they know me, they know my specializations in reverse mortgage and VA mortgages. So they call me about these programs and they ask me these questions. And I explain to them so that their sellers, when they're listing a property, aren't sitting here discriminating against a veteran by saying that they can't do VA mortgages on this house. Slower appraisals is an old thing. It used to take weeks and weeks to get VA loans appraised. I once went with our national association to Washington, D.C., and I met with the heads of VA. This was before COVID, 2018, 2019. And former veterans, those guys are former military officers who decided they needed to revamp this whole system, and they got into the appraisal side of things, and they started adding tons of appraisers to the VA list because you can only get a VA appraiser from a VA appraisal list. They have to be approved. It's very different from others. So of course people think, oh, that makes it stricter. No, it means that they're protecting you. Another benefit of it, a lot of people don't know, is I can talk to that appraiser. As soon as the appraisal's ordered, I can pick up the phone and talk to that appraiser. There's nothing wrong with it. It's not illegal. Other mortgage types have made it illegal after Dodd-Frank, after the mortgage crash. We should be able to talk to the appraiser. It's a benefit to the client. It's a benefit to the whole process when we can communicate with them. When we deal with these appraisal management companies, these middlemen, it's such a difficult process to communicate because you have to type it in and then they communicate it to the other person. And then there's this middleman that's going to edit what you say. And it's like, man, I'm not trying to push an illegal value. I'm just trying to communicate with someone in the industry that is deeply involved in this loan. VA has Tidewater in their appraisals. Tidewater is something that they enact when you get to a point that the appraiser cannot meet your purchase price. So if you're buying a house at $500,000 and they don't have any sales getting up there, they might be at 480, but they don't tell us. What they do is they enact Tidewater and they call and they say, okay, we need you, Phil, the mortgage company. We need you to get comps, comparable sales from the two realtors that'll help justify this $500,000 value. I've tried saying, well, what value are you getting? Well, I can't tell you that. I don't have a value because I don't have the comps that are getting us to 500. If you give me the comps and it's a certain way, you got to give it to them and all this stuff. It takes some knowledge and experience with these things. Once you send them that list the way it's supposed to be, then they will finish the appraisal. And they still might come in at 480 because they just can't hit that 500 and the realtors didn't help. A lot of times the realtors know and they're like, yeah, we know, we're just trying to squeeze as much as we can. And it comes in at 480 and they renegotiate the contract. But Tidewater is really cool because what if the appraiser is missing a comp, a certain sale that gets you to that 500 that they weren't getting before? So now we have a deal. Now we have a buyer and seller coming to an agreement on that price and the appraiser agreeing with it. But it took Tidewater to do that. Once the appraisal's out, they can't backtrack it. With conventional loans, it's different. Conventional or FHA. When you want to have a rebuttal on an appraisal, because you get that appraisal, you get it at 480, well, now you've got to get the comps and send them in. And a lot of times appraisers, I call it the ego, that they're like, no, that's my value. I believe in my value. I stand by my value. So even though you have a better sale, they're going to find a way to get out of that because they want their value that they sent you in, because they want the value that they sent in to stay. VA is not like that. So when they say that VA is having these appraisals that are more difficult or slower, it's just fallacies. It's myths perpetuated in a time where there were far less VA appraisers, but guidelines are not stricter. On the contrary, they're easier to help you get a mortgage with VA. Now, they might say, oh, but if the property is in shambles, you can't sell it. I mean, that's what the FHA also. Government loans have certain health and safety requirements. So yeah, if the property's falling apart, you need to do a construction or renovation loan or something else or hard money and then fix it and then get a VA loan after that. The one area that I will say that VA is stricter is that they require a termite inspection. a WDO report, which is wood destroying organisms. Once we get that WDO report, we're good. And what I always do is even at the pre-approval stage, when we're making offers, I'll talk to the seller's agent and I'll say, does this property have termites? Do you have any fear? Do you see droppings? Do you see wings? Do you see damage? Oh no, we don't have to worry about that. Or, oh, we already know. We're planning on tenting for whichever buyer comes along. So you can get ahead of these things. The one main difference that you have with VA mortgages versus any other mortgage, and in Florida we have termites. It is what it is. You're gonna get them now or you're gonna get them in 5 or 10 years, you're gonna get them. I've had experience with termite mounds under a structure that was not attached to the house. And we had to solve that. So the point of this video is just that. What kind of experience does the person you're working with have? Yeah, we all got to start somewhere. But do you want to work with someone that's just starting somewhere on your biggest purchase of your life? Think about that. If you want open heart surgery, are you going to a podiatrist? Hey, it's a doctor, right? Then why would you go to a conventional mortgage broker or mortgage originator to get your VA loan? And why not work even better with a fellow veteran business? Because I know I do that. I know I focus on helping my fellow veterans, whether you're my clients or I'm using your service. I hope this video was helpful to you, and please like and subscribe. Mortgage Nerd out.